Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. Run up today in the markets, a really good. It was a good run by the bulls, actually. I'm looking at the Google Finance site here. I like to look at that one just to give me an overall look at how the day went. A very, very pretty look by the bulls today. So we got to run up today after a big gap down, which is exactly what you want to see if you are bullish. People will be screaming, of course, this is it. This is a bounce. Get long. Yeah, okay. I'm not convinced yet. However, I don't know if I need a whole lot of proof to be convinced, but I'm still going to wait. We'll talk more about it this weekend, but let's just take a broad look at what we saw today. Look at the huge hammer candle from this morning. Big gap down, run right back up. Another nice run, and then we just kind of drifted, and pow, another nice pop at the end of the day. We still aren't above any of these moving averages, though. I mean, so you can look at it as you will. Just like I said, I still need a little bit more convincing about where we're going and if this big move down is finally complete. However, we did land. Look at this. This is why it's so important that you draw in some of these support and resistance levels on your own chart. Look how we nicely fell to where? Right at this line. Bounced off of it nicely, coming right back up. And now we're going to be watching, of course, the 200-day moving average. For those of you that are Elliotticians, this could be a 1, 2, 3, 4, now 5 down. 5 down could be complete. Maybe, maybe not. Still a little bit early, I think, to tell, but certainly had good action today for the Bulls if you're looking at it from a bounce perspective. Just very logical to bounce down in this area. Once again, guys, look at this. We wiped out a ton of bullish trading in the course of about, what, a couple of weeks. Just took away everything we had gained by beginning of February this morning when it hit down here. So you can see the bear moves are by far the more fun plays. You make a lot more money a lot faster on the short side. Nasdaq on a 60-minute doing the same thing here, gapping down. Had a big gap down here, moved right back up though to this overhead resistance area. Guys, we're still working on these upper moving averages though. I'll be watching those closely coming into next week. Notice how we had a close below the 200, but the Nasdaq did not waste any time in getting back up and over. That is a very strong indice right now. There's another very strong indice as well that the subscribers and I have been following. And so we have a couple of very strong indices that make for great plays, great long plays on bounces like this, or if you're bullish on the markets. So NASDAQ, maybe the same 1, 2, 3, 4, 5 look to it. Yeah, maybe an ABC look. Still a little bit early to tell exactly what this is going to be. All I care about is getting the direction right. From a weekly, look how we came down and just about tapped the 200 or the 50-week moving average. Sorry, 50-week at 1755.47 with the low today at 1767. So we still were a good 13 points away. Could be probably some people down here front running it, but took it on the gap anyway. From the very start of the day, the markets were on their way up. Now, SPX on a 60-minute doing the same thing as well, putting in a big hammerish looking candle down here, now heading its way back up. Still not above these moving averages though, but up 16 points after being down. I don't know what it started the day at, but it must have been down 8, 10, 15 points and all the way back up. So it is a good move. Now look where we stop. Right at the big orange line. Curious how that works. And we tapped, the bottom of this candle tapped what? That's right, this lower support line. So we see that stocks are actually, the markets themselves, are actually acting pretty predictably. If you have your support and resistance areas in the right place, they're actually acting pretty well. So still need a little bit of work, still closing below the 200-day moving average. That will cause a little bit and should cause a little bit of overhead resistance on the way back up. Oh, I don't know. I'll talk more about it this weekend, but we'll see if it holds for a long period of time. I don't know if it will. SPX on a weekly, you can see it. We did get below, but yet managed to get once again back above that 50-week moving average. So still bearish on the weeklies, overall. VIX on a daily did go screaming up to about 48 or so, and then putting in a very large slide down right away. Now, if you're looking at it TA wise, this is a bearish engulfing pattern, meaning we could see some more pullback into early next week on the VIX, which means higher prices on the markets. Pretty close to where we were looking at up here too, within a couple of points of this higher line, but I don't know. Like I said, I don't use the VIX so much for technical analysis standpoint as I do from a fear standpoint. Fear was heavy the last few weeks, really was. This week especially too, just running straight up most of the week. Now maybe we get a reprieve. We've got some, I think, some economic data or something coming, banking data or something coming out next week, and maybe they'll fudge those numbers and make everything look pretty for everyone before giving a little boost to the market. See how that works out. Apple on a 60-minute. Look, we made it 235, actually gapped down to 231, but we made the 235 mark that I've been talking about. Still a lot of overhead resistance now for Apple. It's put itself down below a bunch of stuff. If anything can make it, though, it'll be Apple. It's been a strong stock from a daily standpoint. Look at the big move we had here. I would all but call that a bullish engulfing pattern, which is a bullish formation. So we need some confirmation next week, and we really need to get back up and over this 50-day moving average. That's the biggie right there. You'll notice how it tapped that today. About 245 is where that's at. The high was 244.50. So I'm looking for a move over 245, maybe take us back up into the 247.50 mark, and then maybe 250 above that. Watch that this weekend from a weekly standpoint. I don't know, guys. Pretty close. Call it at, on, or just below Big Blue. So Apple's not. It's starting to show a little bit of weakness on the weekly. So overall, still kind of looks like a pullback to me. We haven't made the 20-week moving average, so I don't know. There's not a lot to panic about in here with Apple, but people are certainly taking profits from earlier rises in Apple. FAS on a 60-minute, same thing. Huge move to the upside right from the very get-go. Once it hit this 20-period moving average, it did nothing. That's where it kind of based and based and based. Now finally popped above it at the end of the day. Daily standpoint, look, one big white candle, also bullish engulfing, so that could mean some more bullishness on FAS coming into next week, looking for pushes up and over that $25 area or so. FAZ on a 60-minute, that means it gapped up and headed down. Gee, I wonder where that gap happened. Nope, not quite. Thought maybe it might have made the 200, but we're not quite up there yet. So 18 was one of my spots for overhead resistance. 1850 was another spot because of the 200. We got right to 1791 and then just drove straight down after that. That is a big bearish engulfing pattern. Look it up. Bearish engulfing candle or bullish engulfing candle. If you guys don't know what that is, it's pretty interesting. Go Google it. Interesting to see those. Now, does it mean that we have to dive Monday? No, it doesn't. But you'll want to be watching it closely coming into early next week. We'll talk more about it this weekend. Okay, if you were following me this week, should have been some money to be made. We played a lot of things to the short side. We played the markets to the short side. There was definitely opportunities here. So thank you so much for tuning in. Once again, these videos are free. I don't push you into registering. I only bring up my mentoring and my newsletters every now and then. Try to keep that as low key as I can, but also make sure you're aware that I do other stuff. So please, if these newsletters and like my basics page where it gives you basics on fundamentals of trading, if those type of things can help other people, please post them on a website or stick them on a blog or just tell your friend about them or something. I really enjoy doing these videos, even though it gets to be a task sometimes doing them every single day, but I really enjoy doing these videos, and I love being able to help out people within the market. So I hope you stuck with me this week. I hope you picked up a couple of nuggets. I hope you made a couple of bucks. I'll see you again on Sunday. Enjoy your weekend. Thanks, guys, and bye.